Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB here at AusBiz. I'm Andrew Gagan. Thanks for joining us on this first day of August. And that is a trigger date as far as Donald Trump is concerned. He has obviously issued a raft of new tariffs that have hit many countries, including Canada and Switzerland among the hardest hit there. But look, this is where we're likely to finish up on the CBO 200, currently off almost 0.9%. Some of that being a reaction to what we heard this morning from Donald Trump as he unveiled his new tariffs. But it appears Australia has escaped relatively lightly. It looks as though we're going to cop that 10% base tariff rate because, well, I guess that's the assumption given that Australia hasn't been mentioned. So that's those countries that do not feature on his list are likely to face that 10% tariff, which the government has welcomed, all things considered, although maybe it's a little too soon to celebrate that. Well, let's take a look at the themes of the day, and well, that goes to that point there, no beef with Trump. Essentially, as I say, Australia seeming to escape relatively lightly, given in particular we have seen 35% tariff on Canada, similar with Taiwan, 39%, 20% for Taiwan. Sleep better. Well, that is ResMed. First out of the blocks in terms of earnings, a good result. Certainly that was welcomed by the market. We'll get to that. And earnings ready. Well, as I said, ResMed first out of the blocks, but it all begins next week in earnest as we get through for your reporting season. Let's catch up with some of the sectors that have been moving. Tech is largely negative today, with WiseTech coming off more than 2.5%. Similar moves there with Xero, whereas Zip is actually, it looks like going to finish in the green. Healthcare, a lot of speculation still as to what Donald Trump is going to do in terms of a tariff on pharmaceuticals. So there is that negative sentiment hanging in the health sector, but CSL, a notable mover there, down almost 3.5%. Elsewhere, the banks, they've been the biggest way on the broader index at this point, although ANZ actually finishing in the green, it would seem, but the Commonwealth off more than 1.5%. Catching up with some of the top stories then, Star Entertainment, those shares have dived after the sale of its Queen's Wharf precinct in Brisbane to its Hong Kong-based joint venture partner collapsed. And the embattled casino operator will be forced to spend millions of dollars on development, repay $41 million, I should say, to the partners, and will be liable for almost $1 billion in debt. Now, ResMed has had a positive day, just coming off a little, but still up around about 1% after it beat fourth quarter earnings forecast due to strong demand for its sleep apnea devices and predicting higher than expected improvement in gross margins for the year ahead. Soul Patts did come off after the business expected its preliminary net asset value to come in between $12.1 and $12.6 billion for FY25, also declaring a fully franked final dividend of 59 cents a share. Novonix reversed earlier gains to be down as the battery materials maker scrapped plans to spin out its consolidated graphite assets through an IPO of Axon Graphite, citing unfavourable market conditions. And Bellevue Gold dropping also, saying it's expecting its gold production in FY26 to reach between 130 and 150,000 ounces and ramp up further from there. Let's now get an assessment of what we've seen this week, and the doctor is in the house. Shane Oliver joining us from AMP. Shane, welcome back. Good to see you. Let's begin then with the news of the day. Obviously, starting off with what we heard from Donald Trump this morning as that deadline was reached August 1st. He has issued a raft of new tariffs, in particular for Canada, Brazil, India, Taiwan, Switzerland, some of the hardest hit there. Australia seemingly relatively unscathed, would you say?
Well, in the great scheme of things, it is. There was this threat that he was potentially going to raise the baseline tariff from 10% to 15 or 20%. So that was certainly a risk for Australia. In the end, it looked like they decided not to. So there are some countries in there, mostly countries with which the US has a trade surplus, that have stayed at 10%, and Australia is in that camp. So I guess that's good news for Australia. I guess the negative, though, is that those tariffs imposed on other countries, including Canada, Brazil, and so on, and there's a whole bunch near us, where Southeast Asia averaging around 20% and so on. That's not so good. That's going to impact global growth. But I guess for those worried about the impact on Australia directly, it's quite minor. And as you can see in that table there, our exports to the US are less than 4% of our total exports. That's about the fourth column along, the third column of numbers along down the bottom there. You see 4.6%, I think it is. So it's a relatively small portion of our exports go to the US. Obviously, bad news for producers in those industries. And it's a relatively small portion of our overall economy, less than 1%. And many of those things like gold, for example, can just go to other countries. So I don't see them, and so far I don't think there is a tariff on gold, but all the other ones, I don't really see a major impact from a macroeconomic point of view on Australia. The main impact comes from that indirect impact, because don't forget, when you add all these tariffs up, and there's a lot of numbers in there, it takes a long time to go through them all, and only just now I realise the start date is not August the 1st, it's August the 7th, 7 days after the executive order signed early this morning. Once you work that out, then our assessment is that this will push up the average tariff going into the US from currently 15%. Earlier this year it was 2 or 3%. So 15% currently, it's going to go up to about 20%, which is a huge impost and obviously going to have a negative impact on US consumers, US businesses, and that can have a negative impact on global growth. So that's the main risk for Australia, I think, in all of this. So I don't think it's a great day. I know markets are a little bit relieved that it's not the Liberation Day highs, but nevertheless, these numbers are pretty high compared to where we started the year.
Now, of course, someone's got to pay for these tariffs, and it appears that those prices are beginning to rise in the States. No real evidence of that appearing here, particularly given we had that latest read on inflation. In fact, these were the numbers that the RBA wanted to see, wasn't it, Shane? The quarterly read on inflation. What did you make of them?
Well, I thought it was a great day, Wednesday. I was really happy when I saw those numbers there. And that chart sort of sums it up. You're seeing that downtrend in the quarterly trim mean. That's the one they focus on, the red line. The monthly trim mean, I'm a little bit sceptical of, fair enough, but it's even lower. It's at 2.1%, and you can see that it does tend to lead on occasion. And so it's telling us the momentum at the end of the quarter in June, compared to June a year ago, was still down for trim mean inflation. So that's good news, I think, for Australia. And Reserve Bank Deputy Governor Hauser confirmed that it was in line with their own expectations, which sees inflation going back to the midpoint of the target range. So that implies no major changes to their inflation numbers. And I think clears the way for a rate cut come August. And of course, that's also supported, I think, although the Reserve Bank has dismissed this one a little bit, by the signs of softness in our jobs market and also the tariffs. I think, yes, we're going to avoid a worst case scenario in terms of global trade wars, or at least between the US and everybody else. But that will be a dampener on global growth and therefore a dampener on Australian growth. So I think the rate cut is very much in the bag. I shouldn't say it's guaranteed because it's not. The Reserve Bank can surprise on these things, but I think it's almost certain we're going to see a cut come that August meeting in less than 2 weeks' time.
Yeah, and of course that's also based on the fact that there's soft consumption here in Australia, Shane. Yet we had a read on retail sales, which actually came in stronger than expected.
They certainly did, and these numbers do bounce around a little bit. Look, retail sales, every time there's sales activity, in this case it was EOFY, end of financial year sales activity, and I think there was a new Nintendo game product out there as well, which saw record sales. When the new products come on, when you have this discounting, you get a bounce. The last time we saw that was Black Friday and Cyber Monday at the end of November, and then the subsequent month is a lot weaker. So when you look at those numbers there, yes, the nominal number, the blue line, went up in June, and that dragged up real spending per person, the red line, in June as well. But I suspect we're probably going to see a fallback when we get to the numbers for July, as that sales activity comes to an end, or at least certainly into August. And the quarterly number, yes, it was up, but only by 0.3%. So it's not as if consumers are going on a spending spree here when you average it out over the 3 months.
Now, Shane, of course, the prospect of a rate cut later this month would be good news for those who already own a home, those with a mortgage. Less so perhaps for those looking to get into the market, particularly when we take a look at where those home values are tracking at the moment.
It's not a pretty picture. I mean, it's a pretty picture for me who own my own house and sitting in it at the moment. You can tell, fantastic, but I don't think that's particularly fair for everybody else. And of course, I'm in Sydney, as you are, and that's the line at the top there, which seems to be going off into the stratosphere. Ridiculous prices, pushing up towards 1.3 million or 1.2 million. But you've seen very strong growth in other cities as well, continuing Adelaide, Brisbane, and Perth. Melbourne looks to be bottoming out. And starting to pick up again. And of course, the gains we saw, this is totality data for the month of July, the gains were broad-based across all 8 capital cities around Australia. So it's quite clear the property market is now again into a rising cycle. Low interest rates are playing a key role in all of that, along with the shortage of housing that has been an issue in Australia for the last 20 years now. And of course, I think that means more house price gains ahead. The flip side, though, is that we are starting from a point of very poor affordability. You know, the average house price around Australia today costs 8 times average household earnings. You go back 20 years ago, it was about 4 or 5 times. So that's obviously a huge impost and lumbering people with lots of debt compared to the situation in the past, and I think will be a bit of a constraint on how much house prices go up by, at least the pace of gains. So I suspect we'll probably stick at this pace of around 0.6% a month, which I think is also consistent with there being some upwards pressure on the unemployment rate.
Now, Shane, what are you going to be watching for in the week ahead? Still locally fairly quiet. Tonight, of course, we've got US non-farm payrolls.
We do. Payrolls are often the big one, although these days the economic data seems to get overwhelmed by what Donald Trump has to say. Like this morning in Australian time, we got data on core PCE, core private consumption inflation in the US, and that would have normally been the focus. But of course, Trump dominates the space these days, and we focused on tariffs. But we do have those payroll numbers tonight. I reckon they'll show a further trend slowing in jobs growth down towards 100,000 jobs. Unemployment probably stays there. I think it's at 4.1%. Probably stays there, but there is some risk of a bit of a tick up. And then in the week ahead, it's a little bit quieter in Australia. There is some more data on household spending on Tuesday, and don't forget, we've now seen the last of the retail sales survey in Australia. That won't be published anymore. We'll switch to that new household expenditure survey, which unfortunately is, I reckon, a bit more noisy than the retail sales number. But anyway, we'll get used to that. And then there's some trade figures on Thursday, I think it is. And in the US, I think the focus there probably remains the profit reporting season, because there's not a lot of data coming out ahead in the week ahead for the US. And of course, we get Chinese trade data and inflation data. And oddly enough, I'm off to China this weekend. So we'll see how things are on the ground over there.
Oh, well, we look forward to speaking to you post your trip. Shane, enjoy it. Thanks for joining us from AMP.
Thanks, Andrew. Take care.
Let's now turn to our stock of the day, and it was SKS Technologies. And to get a cross analysis of that stock, we were joined by Ben Richards from Seneca Financial Solutions and Luke Winchester from Merewether Capital.
Probably $2.40 is probably a fair price for this business. Maybe it's got a little bit of upside, kind of $2.50 to $3 range, but I'd be taking profits here, and it's probably a trim.
It's a different growth profile moving forward. That 10x of revenues and profits and share price, they can't do that again. Ben pointed out, you just doesn't have the leverage to do it. But I think this turns into a more normal growth, normal business, trading on that normal multiple, and it's all a fair price. So I'll say a hold.
Let's return to the market, see how we're likely to settle then on this Friday to round out the week. Has been a negative end to the week. And these are the leaders at the moment with, look, a lot of movement in copper, given Donald Trump has shifted the goalpost in terms of tariffs on the metal. That has actually benefited the local copper miners. Mineral Resources also doing well today. And resource companies, PLS and IGO, also on that positive list On the negative side, checking out what we're seeing there, Telix has come off today along with Polynovo. Bellevue after its update, and some movement in the tech stocks on the negative side by Life360, Tabcorp also falling. Taking a look at what's ahead, in fact tonight we've got US non-farm payrolls. We're also looking ahead for ISM manufacturing out of the States and earnings of tonight, in fact Exxon, Chevron, Moderna and Colgate-Palmolive. And next week, in fact, there we can see where those stocks are, or where they finished earlier this morning, in fact. Now, looking ahead to next week locally, we do have the inflation gauge from the Melbourne Institute, job ads from ANZ, the household spending indicator, and also international trade in goods. Obviously, a focus on that, given what's going on with the tariffs and trade at this point. Internationally, US factory orders, the global services PMI, Bank of England makes its rates decision, and also US consumer credit. And this is what is on the calendar out of the States. Some notables there, particularly Wednesday, Airbnb, DoorDash, McDonald's, Disney, and Uber. So Wednesday will be a big day. Also, Eli Lilly reporting as well, a focus particularly off the back of some negativity emerging among those weight loss drugs at this point. So this is where we're finishing up, 0.85% lower on the CBO 200, checking in on the ASX 200. It's off 0.9%, currently about 1.3% off its record high. That is this Friday and the week on the COB. Thanks for watching and listening.